Hello, my name is Ian Gemler, and I'm the Director of Research at ValueLine. Today, using ValueLine's website and digital platform, I'm going to show you how to quickly and easily find worthwhile investment candidates. Going further, I'm going to recommend one stock to buy right now. After the presentation, as mentioned, we have allotted some time for questions and answers. So if you have any questions, please type them into the Q&A box. All right, we're going to get started. All right. I thought it best to provide a brief overview of the economic situation, as well as the ValueLine Research Department's view of the stock market. The following content was prepared by Harvey Katz, ValueLine's chief economist. Home building continues to give a reasonably good account of itself, with housing starts at their highest level in 9 years, after advancing at their fastest pace in 6 quarters in last year's final period. Even so, building activity is only about half of what it was at the peak of the last housing upcycle. Also, building permits, a more forward-looking barometer, just held steady in December, but at a solid recovery level. Trends favor a continued resilient housing market, as inventories remain quite low. A record-setting stock market is putting more wealth in the hands of potential buyers, and rising home prices are making housing a good investment once again. So, we would expect construction activity and housing sales, which recently hit a 10-year high in the resale category, to remain near recovery highs for some time yet. The economic outlook remains generally positive, as recent surveys affirm that most business and consumer sectors continue to hold their own, with industrial production and factory use doing especially well as we move through the early weeks of 2017. That said, Federal Reserve Chair Janet Yellen's recent comments that she does not expect economic growth to pick up markedly in the near term suggest that growth likely will be capped at 2.0% to 2.5% this year. Meanwhile, a new era is underway in Washington, and one that could lead to firming growth in the next year or so, assuming the new president's oft-stated plans for tax cuts, relaxed regulations, and spending increases are successfully implemented. One byproduct of accelerating growth could be higher inflation, a development that likely would advance the timetable for the Fed's anticipated interest rate hikes. Earnings season is in full swing, as most companies are continuing to do quite well, with many financial, industrial, and technology names exceeding profit forecasts. That healthy showing is helping a richly capitalized stock market press even higher. The Dow Jones Industrial Average finally moved above 20,000, following a series of failed attempts to do so earlier in the year. Records also were set by several other indexes, as Wall Street continued to see the economic glass as half full. In conclusion, the case for optimism on the economy is still compelling. However, with valuations now rich, disappointments out of Washington on earnings or from the Fed could be dealt with harshly. Now for the core presentation. As you can see, I am currently at our homepage, www.valueline.com. On this page, you can access, free of charge, daily market commentaries, as well as general interest articles that are written by our analysts. Just an FYI, ValueLine's research department comprises more than 70 analysts, economists, and quantitative specialists. I am now going to sign in with my username and password. After entering my credentials, I am taken to the welcome screen. From here, I can quickly get to many important areas of our website, including Browse Research, which is the main home of our core equities products. I can also head to our investor tools, as well as the home pages for our stock selection services. For this time, though, I'm going to head to the dashboard. From the dashboard, I can quickly gain access to Value Line's weekly summary and index. This is a great starting off point for investors who seek new holdings. On the front cover are 3 boxes. Each one shows how the Value Line universe is currently being valued based on price to earnings, dividend yield, and 3 to 5 year median appreciation potential. Further down is our industry list, and the bold numbers are the industry ranks, which are based on the underlying stock's timeliness ranks. Simply put, the lower number, the better the rank. A quick scan shows that the oilfield services and equipment industry is ranked 5 out of 97. Let's now use the Value Line screener to look at the stocks in this highly ranked industry. The screener can be accessed from within the Find Ideas tab. Now that I am at the screener, you will see that approximately 50 fields are available to search. Let's first select oilfield services and equipment from the industry list. As you can see, Value Line tracks 84 stocks in this group. Of course, that is far too many, so I'm going to narrow it down by utilizing some of Value Line's proprietary ranks. First, I'm going to focus on stocks that are expected to outperform the year-ahead market based on Value Line's proprietary time-tested timeliness ranks. For those that don't know, the timeliness system is a purely quantitative model that predicts relative price performance over the next 6 to 12 months. The ranks are on a 1 to 5 scale, and rank 1 and 2 stocks are expected to outperform over the near term. So I select timeliness rank, and click on the 1 and the 2. That drops the list to 16 stocks. Still, looking at that many equities would be a tall order. I am now going to utilize our safety ranks to reduce the list further. Value Line safety ranks measure the total risk of a stock and is also arranged on a 1 to 5 scale, with 1 being the least risky issues. For this, let's focus on stocks that have risk profiles of average or better. So I click on the green 3, 2, and 1. Okay, down to 7 stocks, which is a pretty manageable list. With further investigation, perhaps we can come to a conclusion of which one is the best for a diversified, conservative equity portfolio. If you're like me, you tend to watch a few stocks for a few days or weeks before buying shares. Value Line's watch list tool makes this easy. I can access the watch list from the menu above. To save time, I have already created the watch list for these stocks. But this process is very quick and easy. Simply click on the Create Watch List and follow the simple steps. A quick scan shows that only Schlumberger is ranked favorably for timeliness and safety. Schlumberger also stands out from a number of other investment angles, and I'm going to take you through a few of those. Let's now click on the company name and get more information about this issue. I am now on Schlumberger's digital stock report, where the data, information, and analysis is arranged in more than 15 modules or boxes. These modules can be moved around, resized, or hidden so you can create your own customized stock report. For instance, let's say that I'm most interested in the analyst commentary. I can simply click on the box and drag it to the top. In addition, now I want to see more rank-related information. For that, I simply click on the large rectangle in the heading. Once I alter the presentation, I can save the changes from the sliding horizontal action bar. Next time I come to see the stock report, it will look the way I set it up. Let's now get some background in regard to the prospects of the oilfield services and equipment industry, and Schlumberger in particular. I am first going to start with our industry analysis, which is available via a separate module. I'm going to simply scroll down and find the corresponding box. Clicking on the double arrows allows me to solely focus on this information. I can also click on the PDF icon, and the classic industry PDF report will open in another tab. As you can see from the opening paragraph, prospects for the oilfield services and equipment industry have brightened considerably with the implementation of a plan by OPEC and non-OPEC producers to reduce output. The report then goes into great detail in regard to the prospects for the industry. In the end, Robert Mikowski, Associate Research Director at Value Line, had the following to say. The industry's recovery is still in its early stages, and several stocks here offer good long-term possibilities as a result. Moving back to Schlumberger, there is, of course, a ton more data in these modules. However, for those subscribers that prefer the look and feel of Value Line's traditional one-page reports, let's take a look at the PDF. These reports can be accessed from the PDF reports drop-down at the top. I'm going to select the most recent one, which the Value Line Research Department has just created. A quick report of the chart shows that Schlumberger has had a tough time over the past couple of years. This is not surprising since the energy sector, over this time frame, experienced one of the worst downturns in its history. However, as you can see, based on the horizontal dotted lines, we think that the stock will materially recover over the next 3 to 5 years. In fact, we expect this stock to trade between $110 and $150 during the 2019-2021 period. From the midpoint of that range, the stock offers well above average appreciation potential. Moving down to the analyst commentary, again, Robert Mikowski goes into detail about the recent struggles, but also prominently mentions that a recovery in the industry appears likely. In fact, in the third paragraph, he mentions that 2018 could be a big year for earnings. More specifically, he expects ShareNet to reach $3 to $3.50 compared to 2016's tally of just $1.14. In the final paragraph, he states that the shares are timely and offer sizable comeback potential to decade's end. They are particularly suitable for conservative investors given their good safety rating. A decent dividend yield north of 2% is another plus. Of course, no stock is risk-free, and he does caution that higher profits will need to be confirmed over time. All told, we think Schlumberger would make a fine addition to most equity portfolios, and it is a stock that we are recommending right now. Another benefit of Value Line's research and platform that I want to touch on is the Alerts Hub. This subscriber tool can also be accessed via the Find Ideas tab. As you can see, I simply click on Add Alert, type in the ticker SLB, and the information comes right up. Alerts can be set up for a variety of events, including price movement, volume spikes, and the release of new Value Line analysis on that particular stock. For this exercise, I'm going to use the following hypothetical. Perhaps I want to buy Schlumberger stock, but not at the current price of around $83. Instead, I want to wait and see if it hits $80 before jumping in. For this, from the drop-down, I select price rises above X or falls below X. And I want to be notified when SLB falls below $80. If this event occurs, I will be notified via email. I could also enter my cell phone number and would then receive a text message. The Alerts Hub is a great way to stay up to date in regard to the stocks that you are considering to buy or ones that are already in your portfolio. This marks the end of the formal presentation, and I will now take your questions. Okay. The first one, and not to get too political, but it's which stock category is considered safe during Trump's presidential time? Now, of course, President Trump has been president for, I think it's 11 days now, so it's going to be hard to make any surefire expectations of what's going to happen in the next 4 or 8 years. But judging from his initial comments, things like energy, which is one reason why we recommended Schlumberger today, consumer staples, and potentially infrastructure, if he can pass all those spending bills through Congress, could be good places to start. But obviously a lot can change over the days, weeks, months, and years ahead. Another question, how many stocks are typically ranked 1 or 2 for safety? Unlike timeliness, which is a bell curve, there can only be 100 ones at a time and 300 twos, for instance. Safety, each stock is looked at its own merit. At present, there's about 130 rank 1s, but that number was far lower, for instance, a few years ago during the financial crisis. Balance sheets weren't as strong. Access to capital was very difficult. Now, companies' balance sheets are much stronger. Borrowing tends to be a lot easier. So now there's about 130. But that number does fluctuate materially over time, especially as the market changes. Another question, how many industries do you cover? As we went through with the ranking, we have 99 industries. They are part of the 10 major sectors that most of the market follows. And 97 of ours are ranked for relative performance. Last question, what is your Value Line Select product? Unlike what we went through today, where we provide a lot of data on a lot of stocks, Value Line Select is one of our most focused products. Simply put, we recommend one stock to buy each month. This is our top pick from a risk-reward ratio. As we saw with Schlumberger, with the one-page report, the Select reports are much more in-depth. They're 15 to 20 pages, all on that one stock. After we recommend the stock, it gets put in the Select portfolio, which is a diversified group of stocks. And as that stock is in the portfolio, we provide periodic updates, at least quarterly, on what's going on. Importantly with Select, we also tell you when to sell. So with our regular research, we provide our analysis, our ranks, but for Select, not only do we tell you which stock to buy each month, but we also notify you via email or phone, and that's customer choice, on when to sell that particular stock. And those come out right away, and most of our picks have been quite profitable. That is the end of the questions. I hope you guys enjoyed that. For more information, please call 1-800-VALUE-LINE. And this is Ian Gendler, Director of Research. Thank you very much.